Hello, everybody. JD here with the Fireside Trader. Five questions for Louis Navellier. With me is my Fireside Trader podcast co-host, Louis Navellier, obviously. Louis, you were out and about all week, in touch with the masses at the floor, or I guess it was the Las Vegas Money Show. What's the mood out there? Because the market seems to be a little bit cranky.
Well, that's a gold crowd, so they're happy. Um, we recommend over 20 gold stocks, so they're fine. I just told them that, there's going to be a lot of money printing, Europe, Britain, and Japan. They're losing households. There's fewer people paying the system. So they have to print money. It's going to devalue their currencies, and China has to devalue because its rates are now lower than Japan, and this fourth year deflation. In fact, our goods prices in the PPI report have been down 3 of the last 5 months, and they were down much of last year too. So we have price of goods are falling. All you got to do is go to Costco and you get a TCL TV 98 inch for only $1,300.
Louis, let's make that our first question. The PPI report came in hotter than expected, and I've been talking about a narrative of higher inflation and lower growth. Not that I believe in that narrative, but I believe that's a risk to the market should that narrative take hold. Certainly, the data point today would favor that story. What say you?
Well, I think the headline says it, but the details don't. So let's just go into why I think it's going to be deflation. So you are on the opposite side of the fence.
Hold on. To be fair, I am on the deflationary bomb side. Okay.
All
I,
right.
I, I simply like to throw out all of the different, did you ever watch the series Sherlock, Louis?
Yeah. Okay.
There was a great one of the episodes when he faked his demise.
Hmm.
He talked about being on the roof and that there were 13 scenarios that he was looking at. From my way of doing things, I like to look at all of the different scenarios. So that's what
Understood.
I'm talking about here.
Understood. Okay, so let's talk about the problems out there. Wholesale food dropped 1.5. Wholesale energy dropped 2.7. Good prices fell 3 of the last 5 months. Trade services rose 2.5. That was the problem, and in December it rose.
Can
Uh,
you just stop quickly and define trade services for those that don't go into the weeds?
I don't. It's a new indicator in the PPI in the last couple of years.
Okay.
And it was up 1.8 in December. It was up 2.5 in January, and it's screwing up all the numbers. Apparently, it's just how we adjust for the trade balances and all. Now it also does put service costs up. Service costs did go up 0.8%, highest increase since July. But so technically, wholesale service prices are rising, wholesale good prices are falling. So it's a very confusing indicator, and if we threw it out, the core PPI was up 0.3. So I personally think it's everything's fine.
Yeah, it's interesting that the components and there are many variables. So it's really, especially one data point. You should never read into one data point in the first place. You need a series to know when a trend takes hold.
Yeah, yeah.
But the flip side of the story is, the market's been dealing with what I call the AI spooks, and the AI spooks were reinforced today or last night when Jack Dorsey announced he was slashing 50% of his staff
Yeah,
because of expected productivity gains.
yeah, and that continues to happen. But we're still going to need software. Jensen confirmed that. The problem is there's layoffs in the media. CNBC just laid off 12. Washington Post laid off a third of their staff. So if you work in media, you can be replaced by AI, and that's why you are a manic depressive person calling for the end of the world. I had a person yelling at me about uh, you know, us fighting with Europe on the tech companies, and the Defense Department fighting with Anthropic. And this person, who was my former head of marketing, is actually moving to France.
Oh,
And he
wow.
doesn't seem to know that the French can read all your emails and texts openly. In America, they have to subpoena us to do that. And the same thing, by the way, in Mexico, they can read anything you do in Mexico, they can read. And they passed this digital services thing in Europe just so they can spy on you. And of course, if you tweet the wrong thing, you get to go to jail. So, whatever he's bitching about here, he has no idea the surveillance state he's about to move to. And I keep teasing him, you have still have to pay U.S. taxes when you move to France because there's a worldwide tax as an American citizen. So anyway, okay, anyway, so
Yeah, that's everybody thinks the grass is greener on the other side of the fence, and that isn't necessarily the case.
yeah, yeah, but yeah, and by the
Well,
way,
let's move to quite my second question, Louis, real quick. The record earnings and revenue growth in the fourth quarter has been met with a market reaction that is as about as bad as it gets on record. Is that not the case?
yeah, but I'm up sharply this year. And on Monday when we were down 814, I was up. Today I'm going to be down. My gold stock, I don't have enough gold to counterbalance the negative trends. But we're at the end of earnings season. Profit taking is normal. But I just think it's, because the earnings outlook is so strong, let's just go with it and not let all these naysayers jerk us around. A lot of the narratives out there are false, as Jensen Wang pointed out. Okay. So you can listen to a false narrative, you can overreact, or you can grow and prosper. I choose to do the latter.
Well, and that is a good intro to question three. Nvidia released earnings that were spectacular as far as I could tell, and the stock was down whatever it was, 5%.
Yeah, it had been rallying, going into earnings, acting very well. Yes, they blew it out. Sales, earnings. I think sales were up 83, earnings were up, operating earnings up 82, overall earnings were up over 90. They guided higher. But I do think all that cover call writing on Nvidia caused the dog to wag the tail, the tail to wag the dog. I'm sorry. So what happens is all these people writing cover calls on Nvidia. This is Citadel, Jane Street, Virtue Financial. All they're doing is collecting free money, but they don't want to deliver the stock because that's a lot of work and a lot of them are naked on the options. So they just run algorithmic systems to take the stock down so they don't have to pay. They are manipulating markets. And
Louis,
that's
I
what's happening.
usually we talk about macro, good stuff on Nvidia, and I think you said it best yesterday. That was a buy the dip opportunity, and I think Morgan Stanley came out midday with a recommendation to buy Nvidia. The other stock, I think, if investors or traders are looking for a 10 to 20% in less than 6 months, I would turn them to Netflix. I know you're not a fan of Netflix, but your wife is. And the we talked about Netflix in terms of them being a monopoly that isn't acting like a monopoly because they're trying to acquire Warner Brothers. Well, now that they're backing away, let the monopolistic behavior begin. Please raise prices, Netflix, and that stock's going to go through the roof.
Well, first of all, they got a windfall payment for walking away from the Warner Brothers acquisition. Okay. So that's why the stock went up. They got a big windfall. When you look at their actual fundamentals, they're horrible. The sales are good. They keep adding services, but they're trying to get into sports and their servers can't stream fast enough. So if you're watching sports on Netflix, you're probably watching in the poorest resolution possible with a freezing TV.
And the
So,
FCC is investigating all that streaming sports activity,
yeah.
so there is that headwind.
Yeah, so they have to fix that, okay? Because you don't want to irritate your sports fans, okay? All right.
I
So,
remember when Microsoft, you followed Microsoft back
yeah,
dating back to the 90s, and And there was a period there of a decade, maybe even more, where Microsoft was a monopoly and the stock just never went anywhere. And mostly because they weren't exerting their and flexing their monopolistic power in the marketplace. As soon as they began doing that, their fortunes turned around, and I would expect the same with Netflix.
Yeah,
They
no,
are the leader by far.
yeah, they have shelf space. I mean, they're on every remote you buy, on every TV you buy. By the way, did I tell you why Mr. Balmer has more money than Mr. Gates?
Aside from Gates, isn't Gates giving it away?
He's giving away, but the main reason is Balmer never sold the stock and Gates got divorced.
Aha. You're gonna put all of the divorce lawyers out of business.
Well, he's in the Epstein files, so it is what it is.
I remind me when we're done recording. I've got a an interesting divorce story from what it does to people financially. It is unfortunate, but uh, the was it the Wealth of Nations that said individuals or nations act in their you know economic self-interest. Well, divorce doesn't do that.
I know. All right. So Jamie, I
Uh,
got to sign off. Okay.
Okay, well, we'll cut it there. As always, a good conversation, Louis. I didn't get to ask the fifth question, which was, and real quick, you're still loving your gold stocks.
Yeah.
I mentioned before how of course, was thinking about you in the shower because of how perfect your portfolio is set up on the alpha zigging when
Well,
it's
yeah,
hanging.
I did an editorial for Market Watch where I predicted $10,000 gold by the end of the decade, and Ed Yardeni's in that camp too.
Yeah, and I think you're spot on. So you're not selling on all of this strength. You're expecting another double from here,
Yeah, no, and also my sales earnings are super strong, so I'm very comfortable and confident.
and the fundamentals are good. Okay, thanks as always, Louis Navellier. This is JD for Five Questions with Louis Navellier. Thanks for joining us. Louis and I will be back next week. As always, good luck with your trading, everybody. Take care, and we'll see you all next time.